Why do the mainstream media want us all to believe that stock prices are about to drop dramatically, just as we witnessed at the onset of the pandemic earlier this year? Corporate media is full of reports that hint there is a virtual certainty that stock prices will drop further. Of course, it will be very logical for stock prices to go down because they are incredibly overvalued right now. But normally the mainstream media wouldn't try to tell us where the stock prices will go next. And it is particularly troublesome for many new organizations to repeat the same mantra right now. Without a doubt, the momentum of stock prices is pulling us down right now. All major stock indices reported dips for 3 consecutive weeks, and this week seems to be able to do so for 4 weeks. At the time of recording this podcast, the Dow Jones Industrial Average fell 4.5% a month. The S&P 500 fell over 6%, and the Nasdaq nearly 8.5%. Overall, the market is heading for the worst September of 18 years, but corporate-controlled media seems convinced that things will get worse. For example, it comes from a CNBC article titled "Stock Sales Are Accelerating and Are Expected to Get Worse Before They Get Better." Stock investors focused on new worries about the coronavirus and economy, selling into a market Monday that was already technically shaken and set for further declines. For the remainder of this article, I looked for evidence to support a claim that the market is ready for further dips, but never saw it. Undoubtedly, I totally agree that stock prices have a long way to go down, but there is no reason they shouldn't come back for the rest of this week. So it seems strange that CNBC is so dogmatic, and USA Today published an article suggesting that we're dealing with an impending global financial crisis, massive fiscal and monetary policy stimulus that came together to prop up the economy has caused debt to balloon and stocks to become potentially overvalued, posing the serious risks of a looming global financial crisis as central banks begin to shift away from easy monetary policy at some point in the years to come. Once again, I strongly agree that a global financial crisis can erupt at any time. However, we normally don't see mainstream media using such language. At this point, the election was less than a month and a half away, and many suggested that uncertainty about the outcome could severely impact the market. Actually, CNN says we should predict that volatility will be high in the period surrounding the election day. Market experts have warned that volatility will be high toward the end of this year and around the election, especially because many expect the winner won't be known immediately. Is it possible that one of the candidates was in an attempt to disrupt the market to make it look bad? I know this will sound silly in normal times, but these are definitely not normal times. And the ultra-rich insiders certainly seem to believe something is coming, because they have been selling stocks like crazy lately. According to Zero Hedge, in the week ending September 11, insiders bought only $9.5 million while selling $473 million of shares. I don't know about you, but these numbers definitely caught my attention. Of course, stock prices should never have been higher. The unprecedented market rally we witnessed in 2020 took place at a time when we were actually entering a new economic depression. Almost every day I share more horrible economic figures with my readers. And here's a little more than the New York Post. Nearly 90% of New York City bar and restaurant owners couldn't pay their rent in August, heightening the continued crush the coronavirus shutdown has inflicted on Gotham's economy. 87% of bars restaurants, nightclubs, and event spaces in the 5 boroughs could not pay their full August rent. According to the data from 457 businesses surveyed between August 25th and September 11th in a new study released Monday by the non-profit NYC Hospitality Alliance. How could anyone in the world use the phrase economic recovery when we see such numbers? We have not seen an economic recession of this magnitude in all of modern American history, and many believe that what we have experienced so far is just the beginning. We see more and more social turmoil in the headlines, and the upcoming elections threaten to bring our social tensions to a booming climax. In such an environment, a major stock market crash would not be surprising, and some suggest that the push that pushed us aside could actually happen on purpose. In his latest video, Greg Mannarino warned that the impending financial collapse would be epic and told his audiences that our largest financial institutions could crash the market at any time. They can crush the global economy or the market. The global economy, which is the middle class, is already crushed. Okay, they can destroy the stock market like this. And you can see it playing out right now. So all of this is more than likely going to get brushed under the rug, as it always does, Mannarino says, of the banks controlling the world. It's not uncommon for experts like Mannarino to make such bold predictions, but what worries me is that the mainstream media is also strongly suggesting that a market crash is imminent. Even if the mainstream media is not trying to do this deliberately, their words can become a self-fulfilling prophecy as countless investors who fear their reports pull money from the market. Unfortunately, this is an example that mainstream media will ultimately justify, whether or not it is in the near future. The truth is that we are heading towards an absolutely dire financial collapse. Over the past few weeks, the central bank has managed to inflate our financial bubbles once again, and herds of investors have eagerly jumped on the rally train. But now that train is in danger of derailment, and those who didn't jump in time may find themselves in the middle of a nightmarish financial chasm.
Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.